Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Hi everybody, welcome back to my channel. It is Tuesday, December 9th. I'm going to add 2 more tickers to the 5 that we've been reviewing. I'd like for us to take a look at some of the financial tickers like Bank of America and American Express. So watch to the end of the video and you can hear my analysis for those 2 tickers. Let's get started with the triple Qs. All right. Triple Qs, you can see up here, is getting rejected off of this trend line resistance. My last video was on Tuesday last week, which is on this candle. This is the green candle at the very bottom edge of the gap entry, which is this one right here, this candle. And I drew this overhead resistance here for this trend line to remind all of us the price will likely continue to move upward from a price action standpoint and will likely get rejected up here. You can see that it hasn't quite reached it, but my annotation isn't changing. It's still going to stay there as a rejection zone, and the overall direction remains to the downside for triple Qs. Just a reminder for folks who haven't been watching this channel, there's all this RSI divergence down here to talk about the change in momentum. And I put these sharks up here to inform everybody that the big players, the sharks and the whales, are telling one another to get out of the trade. So they're taking their profits so that they can have a nice Christmas with their families in Bali. Take their family to Bali or somewhere super swanky. Okay? So if you're long triple Qs, take your profits because this is not the time to go long. Let's move over to GDX. This is the gold miners play. Similarly with triple Qs, the overall direction for GDX remains unchanged for me. It is to the downside. You can see up here that I did put a shark with quotes around it. And the quotes was my prediction that the market makers, the big players, the sharks and whales, intend to push price upward to make a new high that will cause a pattern called a double top. One top here, second top here. So my anticipation is that they will create a new high or are very close to one, because the high over here is 85.09 back in October. The closest we got was on this candle here. The high was 84.03, so practically there. I think they're going to push it up a little bit more just to get people excited to take the long trade. So I'm going to annotate here the overhead resistance of this trend line here. So price will likely move up, perhaps dabble up here before moving downward, okay? Overall, the direction is to the downside. There may be support here on this trend line or perhaps where the 200-day hits. You know, it's all dependent on, this is all prediction here, how I drew it. But there is a momentum change caused by RSI right here. You can see it here. And the overall direction is to the downside. So no change in my prediction for GDX. Next up is Bitcoin. Bitcoin is behaving as I predicted. And if you watch my last video, which was on Tuesday last week, which is here, Tuesday, December 2nd, I made a prediction, a bold prediction, but hey, most channels only tell you about what has already happened. Very few channels tell you about what is likely to happen based on technical analysis and a little bit of reading the price action. You can see that I drew this flag here, this flag pattern, okay, which is a bearish flag pattern. I duplicated this long flagpole, and where price broke underneath the flag, the general way in which one annotates it is to put the flag at where price broke beneath this wedge. Okay, so it broke right here. It came back, and you could see price came back, retested at this resistance zone, which I drew in the red here. Okay, got rejected, and then today it did the same. You can see that they opened the day up here, and it fought throughout the day, but then is below it. Overall, you might want to ask, well, is there any bullishness? Is this the right time to buy in? And based on the RSI down here, it is not. I will tell you when it's time to go back in. You know, if you have been watching my channel, my long trades, I tell people, look for when I put the whale. And the whale is the accumulation that the big fish are doing for that ticker. They're telling one another, all right, bros, time to load back in, okay? Right now, there is none of that. We're just playing off of this sell signal by the sharks up here with all of this extensive bearishness down here, okay? Price action moving upward, RSI momentum moving downward. And hence, price broke underneath this super long trend line, this purple trend line. I'll review it again for folks. This is the weekly chart. It's a little bit messy. You can't really read my numbers here just because everything got squashed. But the main point is this long trend line, okay, this purple trend line that you see here. Goes back all the way to 2011, okay? And you can see all the times that price has been bouncing either underneath it or above it and using it as support. It's been using it as support, support all along here, okay? And then it finally broke underneath. And this is significant. If it stays underneath, it's Geronimo. So my prediction, if it stays underneath, is eventually Bitcoin will get down to a really nice, cheap spot of about 58. So we'll see. All right, if you're long Bitcoin, take your profits, go to Bali, fly to somewhere nice, and enjoy your winnings. Let's switch to Microsoft. Okay, also a double top pattern here. Okay, double top. You can see the selling. A lot of selling candles down here. Here, there you go. You can see a little bit better. A lot of selling. And this is really the time that the whales and the sharks are taking their profits. I quickly drew the this bearish flag here. And you can see price broke. And it's come back a little bit today to kind of test, perhaps test the upper parts of this flag. But really, there's no bullishness down here. This is just retail investors buying back in. Notice the volume, the selling volume, these candles here, the volume candles down here, are greater proportionally than the green ones. You can see the green ones, people are buying back in. They're getting excited because it's bouncing off the 200-day. Let me move the 200-day real quick. And this is just me freehand drawing the 200-day. I'll just slide over. There you go. So price, you know, is near the 200-day. Everybody's excited. They're buying back in. That's fine. But my overall direction for you, my, non-certified, non-professionally trained analysis is, in my opinion, is that it's lower prices for Microsoft. Take your profits while you can. Let's switch over to Northrop Grumman. Same thing. This bear flag pattern is playing out. The break was pretty impulsive here. You can see this break, at least from a price movement, but the volume hasn't been super crazy. Okay, so that kind of makes me a little bit wary. There is no bullishness though. You know, when you look down here, the momentum remains. price and momentum agree. Hence, there's no change in direction. Okay, it remains to the downside. I'm going to redraw the flag pattern a little bit because I see a different flag, another flag, due to this candle here. So I might as well just draw it. So from here, and I'm going to switch to the hourly. Okay, so from an hourly perspective, I want us to take a look at this. So hourly, I'll draw this flag like this, okay, down to here. And then you can see all this sideways price action. Oh, let me make that a little bit darker for us. A little bit hard to see with the 1 pixel. So let's make this 4 pixels. And then draw the remaining part of the flag. It's kind of a sideways flag, in fact. Yeah, I'll extend it a little bit. This is the hourly, though, so it will look skewed when I go to the daily candles. But I'll just kind of draw it like this. Okay, so now I'm going to switch to the daily. Take a look real quick. All right, it's skewed. It looks pretty ugly. So let's go back to the hourly. It's funny. So there you are. So if I were to take this candle, this flagpole, excuse me, clone it, and then drag it down wherever it breaks, okay, wherever it breaks. So let's just say it breaks somewhere over here. What the heck? Anywhere here. But what you can see is it's the same annotation, essentially, okay? It's going to go to the bottom edge of the gap. All right, so what I'm highlighting to you is when I drew this flag pattern up here in black, and actually today's flag, let me just change it really quickly to a different color, just so that we can discuss it in a different way with the light blue. I'll make this light blue as well. Okay, so this long flag pole, I cloned it at this part of the tip of the flag itself, and that's really just a guess. I don't know where it's going to break. It broke here, so I should move it over there. I'll move it over. It broke here, okay? And you can see that it brings us down to the bottom edge of the gap fill. And then today, just now you saw me do it, I drew this other flag and also grabbed the flagpole, and I just made an estimate. I'm guessing where the break would be on this new flag. And you can see the flagpole also reaches down here to the bottom part of the gap fill. So Northrop is heading down there. No change in my overall analysis. Further low prices for Northrop. Take your profits, go to Bali. Okay, that'll be my new phrase. Go to Bali. Take your profits, go to Bali. I've never been to Bali. I just hear it's expensive. Okay? And it's like a bougie place. Rich people go there. All right, so that's Northrop. Now let's look at a couple tickers just to kind of switch things up. We often look at the tech stocks, and we've been looking at Bitcoin and gold. Well, let's look at financials a little bit. Zooming out on American Express. Let's go to the weekly chart. And I want to highlight this long-term purple line, okay? Long-term purple trend line. So I'm going to just go like this. So we get down here at the very bottom, you can see the years, okay? So this purple trend line goes all the way back. And look at how price, okay? It's been resistance all along here. So all the way back to, let's say, 2016, okay, at 2016. Switch to 2016, and I just added momentum here. You could see that this purple trend line has been resistance all along. And this is the weekly chart. Every candle is a week. It's been resistance. So price behaves a certain way when it gets there. So let's look at a more recent behavior. Back in this November timeframe, okay, let's go to the daily There you go. The November time frame, right here, you can see that, excuse me, let me rephrase. From July to January this past year, in July last year to January this year, there's been a downward move, a momentum change, quite a lot for American Express, whereas the price action kept going up. And once price came up here, up into this zone, up into this upper part of the purple trend line, it's resistance there. And that's where the sharks told one another to get out. And when they got out, they took profits off the table at the order of approximately 30%. Okay, rough. That means they made a boatload of money off the backs of retail investors. Then, what do? They told one another to get back in. The momentum change is down here. You can see it. It's very obvious. They said, hey guys, price is moving down. Retail investors don't know what's going on. This is the time for us to get back in. So they did the bat signal, right? For me, I use the whale for the long. They said, hey guys, let's get back in, okay? Based on the change in divergence. It's there for you to see. It's pretty obvious. And once they did that, what do? They rode price up. So from this low, they rode price up. I'm going to bring price up to where it is up here. That's a 60% move, okay, to this spot here. So they made out as like a bandit, because in order for them to buy back in, they have to have liquidity. Liquidity is you have to have the other side of the trade. You can't just be selling something and not have a buyer. That means there's no liquidity. So what did they do? They got out up here, produced the liquidity for them to buy back in, because people are selling. The retail investors are selling right here. On these 2 days, they're like, oh crap, I'm out, I'm selling, okay? Which produced the volume of shares available for the whales, the big players, to get back in. And when they got back in, they're making bank, 65% up since this low down here in April of 25. And this is the time that they rinse and repeat. They're like, okay, guys, let's go to Bali. Let's, you, me, all of our kids, let's take the private jet. Let's go to Bali. They're out. So I'm warning you, if you're long American Express, this is the zone of resistance up here. They're getting out. Now, for those of us who want to trade like the sharks, then I put an alert here that informs me of when price breaks down beneath this lower trend line that I've annotated here. And that would be the opportunity for us to prepare our short trade. What will happen, it's the usual thing. Let's say price breaks down. It will always come back. It will come back. And it will hit the lower side of this trend line as resistance before it resumes the selling. So this is where we would take the short when it comes back to hit the lower side of the trend line, okay? So right now, I'm not annotating that because it's a little bit more advanced, and I haven't seen any comments about people really wanting to short, so I won't talk about it too much. But overall direction remains to the downside, okay? And what's interesting is it's a thin zone. I've observed that this zone here between 341 and 277 is a thin trading zone. There's not a lot of volume in there. So once price breaks beneath the, I'm just drawing the 200-day here. Once price breaks beneath the 340 zone up here, sayonara, it's a big move down, okay? So take your profits if you're in American Express, because The sharks and whales are playing you. Let's switch over to Bank of America. Bank of America overall has the same pattern that American Express has. So I'm not going to rehash the long-term trend line, which I've drawn here. I'll just make it purple. Purple. There you go. Same thing. Same behavior. The sharks have told one another to get out. Okay? These guys are going to Bali. And you can see here, the RSI is to the downside, which is opposite of the price action, which is exactly the setup of momentum change the sharks are telling us right now. They're telling one another to get out. I'm going to put, I also put an alert here. This is an impassioned voice, okay? So I put an alert on this lower trend line, also to tell me when price breaks underneath there. And I'll tell you. Now, the retest, when it comes back and retests, so let's say retest up here at around whatever this is, 50, 55, 54, okay? It's a thin zone. Through here, it's pretty thin. It's not as thin as the American Express. So I think there will be some bouncing along the way, some short-term bounces to get people excited. Overall, 30% is down here to 38, okay? Because this spot, this is a thin zone right here. So it's thin through here, and then it'll bounce around here, the 45, 47 zone. And then once it breaks down here, it's further low prices. So we will make the annotation, okay? Overall, that's the move, general direction. All right. So when people say, hey, why don't you rotate your stocks from tech to financials to whatever the other sector is? Well, don't be fooled. The rotation isn't like that, because the sharks are doing the same thing in the financials. Further low prices are coming overall. All right. So if you like this video, please give me a thumbs up. Please share my material with your friends and family. It is December. I know you're buying your gifts for your loved ones and using your hard-earned money to do so. Remember, on this channel, I'm trying to protect the gains that you've had. So good luck with your trades, and I will see you next week.